All right, so let's start. So, good evening, everyone. My name is Anindo Mukhopadhyay. On behalf of Bengali Association of Greater Nashville, I welcome you all to the first uh, virtual Zoom session on different topics that are suggested by our members. And thank you, Ovidu, for suggesting this topic. So I will introduce our moderator, Mr. Arup Bandyopadhyay, and then he can take it from there. Just a quick housekeeping item that please stay muted, please, during the discussions. And if you need to ask a question, just send a message in the chat, and our host Suvajit will unmute you. Then you can ask. But please do not unmute yourself if you can. Please do not unmute yourself. Otherwise, it will be difficult to manage the conversation. So let me Mr. Arup Bandyopadhyay, as you all probably know, that is an entrepreneur whose expertise in environmental science and engineering, and he works closely with industries, and he studies the financial and social impact of government policies of the operations of the industries, right? And you know him as a longtime member of Bengali Association of Nashville, Greater Nashville. So I'll hand it over to you, Arupda, for the discussion to start the discussion.
Thank you, Anindo. Before we get started, couple of quick points I would like to mention. Number one, although it is a BAGN event, but we will try to communicate more in English. Not that Bangla is not allowed. Definitely বাংলাতেও প্রশ্ন করা যেতে পারে, উত্তর দেওয়াও যেতে পারে. But we have several non-Bengali friends of ours, and for their benefits, and also since this is a financial seminar which involves a bunch of questions, rules, regulations, which are perhaps easier said and done in English. আমাদের primary discussion language medium হবে English, but we can definitely ask questions and answer too in Bengali as well. তেমন হার্ড অ্যান্ড ফাস্ট আমরা মেনটেন করব না, although we will maintain mostly in English. So please try to maintain that. Number two, before I get to our three main speakers, couple of other things. Most of you will have questions, no doubt, but please slowly take turns in asking questions. Either send a message or raise your hand. I think there's a raise hand button too somewhere, so that you can get your chance to ask specific questions that you may have. To could be all the speakers, could be one of the three speakers. We have a bunch of questions that we have received already through BAGN Secretary that many of you have sent to us already. So we will try to address those first, and and then open up the forum to everybody else. Uh, if you have a question on a topic of discussion already, again, same thing. Please raise your hand and ask then. Obviously, we will be discussing about several topics, which you may not have thought about that. Oh, yes, I have a question on that too. So please go ahead and ask those questions as well. So stop the speaker again, showing that you have a question on that specific topic that is being discussed, and we will definitely entertain your question related to that topic. Having said that, I will take a moment to kind of introduce our three speakers, but they will self-introduce introduce instead of me introducing them. Let me start with our very own Shominda, Dr. Shomin Ghosh. Shominda, please take a minute to introduce yourself.
Thank you, Arup, and thank you, BAGN, for hosting this. This is the first time we are doing this ever for the last 25 years that I'm here. And this is a unique opportunity to open up to the community for anything that they want to know in this very important topic at this time. I am Somin Ghosh. I happen to be a professor for last 39 years. I served Tennessee State University for the past 25 years. Tomorrow is my last date, 15th, with Tennessee State University since I've retired. But prior to that, I worked at the New Mexico State University for 14 years, where I was tenured. And before that, I did my PhD in economics from Utah State University. And so this is my 43 years in the United States. So that's all. I have worked for multiple consulting firms, including many international and national agencies. That's all about me. So, Arup, you can take the floor, introduce the others.
Thank you so much, Rominda. Appreciate it. Our next speaker that I would like to self-introduce is, again, আমাদের নিজেদের অচিন্ত রায়.
Good evening, Arugda, and good evening, everyone. It's a privilege to join you today, and thank you, BAGN, for organizing this event. I also teach at Tennessee State University, and in the interest of time, uh, I'll just that's the introduction that I will give for myself, and I just shared in the chat box my personal website. If anyone wants to know more about me, my resume is there, so feel free to uh, find more about myself. And thank you for having me here today.
Thank you, Ochinto. And our other speaker is, again, all of you know him, Dipendra Chattopadhyay.
Thank you, Arubda. Thank you, BAGN, for hosting this. This is really good and timely. And I very much thank BAGN for including me in this conversation. My name is Dipendra Chattopadhyay. I have been in the United States for about now almost 23 years, about 15 of them in Nashville. I am an ex-software professional, but now I currently trade full-time, trading options and futures in the US market. Looking forward to this conversation. Thank you.
Very good. Thank you, Dipendra. Before we get to the specific questions, couple of other things. I personally wanted to thank Ovirup Patro. He first came up with this idea that so much going on in the recent changes with the new administration in the White House and regulatory changes, law changes, tariffs, and all that thing. So can we have a discussion in a forum set up in BAGN about what could be the implications, so on and so forth. Great idea, and he took it to our BAGN CC. And again, sincere thanks to our BAGN CC for taking this up and putting this together for this forum. I sincerely appreciate, first of all, to appreciate Ovirup for coming up with the idea, and then, of course, BAGN to put this together. Having said that, before we move on to the questions, I think I saw Omrit raising his hand. So let me first, without going to the questions, let me first go to Omrit. Do you have a question? Well, can Shubho, anybody, BAGN host? Yeah. Can you unmute Omrit?
Yeah, I did that. Can you check that if you can?
Omrit, do you have a question still or you do not? Appears.
I'm so sorry, I could not unmute myself. No, I do not have any questions. I'm here to listen.
Okay, no problem. Thank you, sir. Appreciate it.
Thank you.
Okay. All right, let's move on. Like I said, we have had several questions from BAGN members and non-members. So we'll try to cover some of those. Plus, of course, your questions that you may have will also be entertained. Let's start with the first question, which is related to tariff. Of course, tariff issue has been quite exciting, I guess, for all of us. And we have related to tariff, we have seen so many memes and whatnot, including Hindi song, Tarif Karu Kya Iski. So let's talk about tariff a little bit. So what are the implications of tariffs? does that mean that my expenses, including grocery costs and all that, will that go up? Will that be a short term, long term, forever? What do you think? I'm going to ask this question open to all the three speakers. Whoever feels, please go ahead.
Shominda, why don't you tackle this?
All right, I'll take a first pass at it. No, Achinto or Dipendra didn't say it. To the economist, there are different different classes of economists, different schools of thoughts. The school that I am groomed at, I belong to actually, even now, is the Chicago School. And we were trained to view tariff as the evil, meaning it's a tax. It's a tax on consumers, and it's also a tax on producers to some extent. And there is something called a deadweight loss to the society, meaning the society as a whole cannot appropriate part of the surpluses which consumers and producers gain in a free market economy. Having said that, what is tariff? For the non-economists, general people, I would like to explain what tariff is. Tariff is nothing but a tax. It's a tax. Typically, when you say tariff, could be on import tariff, could be on export tariff. Okay, normally it's synonymous with import tariff, which typically, and then there is a reciprocal tariff. So I'm going to come to that. So import tariff means when you import a good or a product from, say, Mexico or China, you put a tax. 10%, 15%, 20%, 100%. So what does that do? That increases the price per unit on that good. So tariff is a pricing measure of protected trade. There are non-tariff barriers also. We call it barriers to trade, free trade. Now, when that tariff is implemented, it immediately affects prices. Prices at the end, prices that we face every day in the grocery store. As you know, that Walmart, if you go to Walmart, most of us do, Home Depot, for example, those goods, 80 to 90% are imported from all over the world, India, China, Bangladesh, etc. Okay, Mexico. So if you put, let's say, 20% tariff on that, so that tariff, what does it do? It immediately increases the CIF. What is CIF? Cost including freight that comes to the landing station. Okay. Now, whether that tariff 20% is passed on to the consumers or not depends on the seller, end seller, Walmart in this case, or Home Depot. They will be hard pressed not to pass it on. After all, if you believe that we live in a capitalistic, semi-capitalistic society, not 100%, then capital will get their most benefit where they can make the most money. So it is kind of uneasy for me to think that through the philanthropic approach or through the voluntary approach, and the benevolent approach rather, the producers is not going to pass on the price increase to the consumers. So ultimately, it has to be factored in. So what happens, your question was, would you receive at the food prices, all prices, gas prices, anything that you buy, consume every day, we'll see that increase in prices. I don't know it's one-to-one, or some part of that will definitely have to be borne by the consumers. So yes, it will hit our pocketbook, number one.
Thank you, Shominda. One point I forgot to mention, and I apologize for that. Let's try to, for all the speakers, please try to restrict your answer. Take like a minute and a half, maximum 2 minutes. And I'll request Shubhajit Biswas, if you can kind of, not exactly with the stopwatch, but keep an eye on the time, because there are many questions that we would like to cover. Excellent answer, Shominda, but I would still ask if Achinto or Dipendra would like to add anything to it. And when anyone is going to add anything to a question, please try to restrict yourself by like 30 to 45 seconds. Again, the reason is we want to cover as many questions as we can. Thank you. So, Ochinto or Deependra, please go ahead with anything you may want to add.
Achintoda, you want to go
Dipendra,
first?
go ahead.
Okay. So tariff is basically a tool of trade relationships that are used by governments, or it can be a tool of revenue. So those are two aspects to it. Now, before the world was so much interconnected, people could actually effectively, manage those things with tariffs. Over time, that has kind of come loose a little bit because now the global trade is interconnected. I'm saying that first because whether our costs of things, goods we consume will increase or not, will be dependent upon what that does to demand. Meaning today, if we as consumers refuse purchasing things that come at a higher cost due to tariffs, and I'm not assuming at this point that the importers are absorbing it, but if tariff causes costs to go up and that reduces demand or demand destruction, then eventually the prices will stabilize or it will stay at what level it is today and so on. And we will not have significant price increases if demand is destructed. On the other hand, if based on whatever incentives or foresights or whatever importers have, if they choose not to pass through the costs of trade of the goods and absorb themselves, then prices won't increase. The final scenario is this, that the whole point of tariffs, stated point at this point, is to balance the trade deficits that we have, the United States have with others. And if that causes to rebalance the trade itself, then that will again lead to a different supply and demand dynamic, leading to the costs staying stable or not, totally depending upon demand. So it is not a given. We have to watch. If people still have the same demand to buy things, then the prices will go up because there is demand. If not, it will either stay stable or there'll be reduction even in some cases. So it's not a single answer.
Thank you, Deependra. Ochinto, would you like to add anything?
A couple of points. I think Shomenda and Dipendra has pretty much done the job of covering the basic points of tariffs. I'd like to add one final point, which is the context of the current debate. United States is going into the 250th year since our independence. And for the majority of the time, we have had only tariffs as our major source of income. And income tax is a fairly new thing. It's a 20th century thing. It did not exist. And we had land tax and few other taxes. Don't forget the Boston Tea Party and all that because of tariff. The current debate can be contextualized by asking a simple question. Is this for an economic policy or is it a tool of international statecraft, which is driven by the economic scenarios? And just like Deependra has very eloquently articulated, whether or not the tariffs are going to be leading to higher prices or not, that will depend on industrial structure, that will depend on the mix of products of goods and services that we are importing, the competitiveness of the local economy, the substitutability and complementarity. So, I mean, if you have opportunities, you can take an international economics class for this long answer. The short answer is for some products, we are going to be seeing increased prices, maybe not for others. But tariff incomes also cut through some of the budget deficits that we are facing, recent times. But as Dipendra has mentioned and Somenda has insinuated, that there are considerations of statecraft that we have to think about. And right now, the debate that we are having is not about whether or not to have tariffs. The debate about how much to have tariffs, because the current administration has escalated the tariff, but they have also escalated the tariff when the Trump 1 administration was in power 2017 to 2025. And some of those tariffs was not removed by the following administration. So we have tariff, we are increasing the tariff, and you know that some of them are being negotiated. The China deal came out, at least was announced yesterday, 90-day pause. We will see what happens, but in the current circumstances, I would see the tariff as much as an instrument of statecraft in a kind of like a geopolitical 3D chess than simply a one-shot economic approach that has a definitive answer over the next 60 to 90 days.
Okay. Thank you very much. Thanks to all three of you. Let's move on to another question that we have. The question is this: with the change in federal government recently, do I need to worry about my children's college tuition costs? Is that expected to go up or down? I would like to ask this specific question specifically to Ochinto and Dipendro, because I know they have kids going to college soon. So I guess they perhaps have to prepare themselves a little bit more than so many others, including myself. So Dipendra, would you like to take a cut at it first?
Sure. So yes, short answer, college costs are going to go up. And it has nothing to do with who is in the government. It is a basic concept of inflation. Prices hardly go down unless there is less demand. And I come back to demand all the time when talking about costs, because demand and supply finally decide costs. In a capitalistic economy like ours, or anywhere in the world, the cost will be what the market will bear. And at this point, everybody's pushing their kids to go to college. And with inflation going, by the way, let's be very clear that what we talk about when we say inflation is down is that the rate of increase of prices are down. The prices are not coming down. Just that the rate of increase has kind of come down. So yes, prices are going to go up. Is there a scenario where we can see less? So there are two scenarios that I have looked at or I have thought of, and where it will be less. One is that, again, there is a demand destruction. Many people choose not to go to college because the kind of opportunities that colleges or a college degree gives you may not exist because of AI. And people might realize that, okay, there's no reason to just go to college and then out of that not be able to pursue a line of job or a line of income. So there could be a demand destruction there. If that happens, then yes, the cost will come down because not many people would want it, demand destruction. The second reason why college might come down is if there is a cultural war that is kind of starting. And so if you see that the federal government currently, and that is the only reason why I'm bringing the federal government in, is because that the federal government has believed or believes, this current administration believes that the elite colleges in this country have skewed away from what most of America believes, and therefore the federal government should not subsidize their efforts. Now, usually that means that if the colleges are not being funded by the federal government, they will try to get that more from the applicants. But there is always a line of diminishing returns that anybody who's going to college will probably find, and that is the cost will be prohibitive to go to college. So if that happens, along with the fact that people realize that the usual role of college to provide training for a good paying job or a line of study is being reduced due to involvement of AI, that is the only reason, or those are the two reasons kind of interlocked, I see that the cost will come down. If that scenario does not materialize within the next 4 or 5 years when our kids are going to college, then I expect the college cost to be fully up. That's my answer. Rajendra?
Yeah, I think the question was that with the current administration, um, and Dipendra pointed out correctly, whether it is the current administration or any future administration, college costs are most likely going to go up for a vast cross section of colleges. But again, that question hides a lot more nuances. So, what is the sticker price and what is the actual price? Um, it turns out that the sticker price is growing much faster than the out-of-pocket costs for many the practical situations. Many of the big colleges, those who have a very high amount of endowment, they are heavily subsidizing people from a fairly good income level even. I think in recent times, even Vanderbilt has decided that not to charge any tuition for families making 150,000 or less. I think, or something around that number. It could be the same thing is being decided by Princeton, and probably MIT has done some things in the same area. But also, what I also want others to know that, you know, there are colleges that are facing financial troubles, which may not be able to increase prices because while we are having an excess demand situation, as Dipendra was talking about, the demand exceeding supply for some brand name colleges, we are also seeing a demographic cliff, which basically means that the number of 18-year-olds in the country is actually not in a good shape. It is going down. And we had a pretty big shock to the birth rate back in 2008, 2009 during the Great Recession. So right around 2027 and up and going forward, we'll have significant number of less applicants applying for many colleges. Now, probably some of those will be felt by state schools or schools that are not at the high demand list. So how the colleges are going to be increasing their prices still remains to be seen. But there will be inflation. I mean, because higher education is a very capital intensive industry. One last thing I will mention before we probably close this thing, as Dipendra has touched upon it, AI is one of the issues, definitely. But also, there is an emerging threat that the higher education is facing from the MOOC, or Massive Open Online Classes. Think about Coursera, okay? And those are the competitors from the traditional point of view. Those of you who have young children, or even some of us in the room, I mean, I think you can get a full Master of Science in computer science from Georgia Tech for $11,000, which is unbelievable. Wouldn't happen before. So, you can get a college degree for $20,000 on Coursera, $25,000. You can get a law degree in some cases for $15,000, $20,000 from other cases. So three things are happening at the same time. While there is a excess demand situation, but also there is this countervailing pressure because of demographic changes. And then, just like AI is transforming the labor market, AI is also transforming the higher education market. So it is entirely possible that the same degree that would have cost 30, 40, $50,000 before can now only going to cost like 10 to $15,000, because now we can scale up the technology and make it much more democratized. So just to delineate the question from a political standpoint, which is the current administration, I'm reflecting on the general trend. I'm very excited that we are going to see changes which are probably very hard to predict at this time. Although I expect an increased prices, but I also expect a, a, a cost decline, especially when it comes to very good state level, good schools, and even online education, pretty dramatically. Now, it's a question of choice. Who ends up choosing what?
Okay, thank you both. One quick request to all the speakers. We have limited time and there are many questions we need to cover. So let's try to restrict our answers to a little bit closer to 2 minutes max, minute and a half to 2 minutes, so that we can cover all the questions. That's the
Can
main
I can
reason.
I can I can I urge Arup just to reflect on this particular issue because it's very important, even though I don't have children at the college going age right
Sure,
now.
go ahead.
My granddaughter is just 2.5, so it'll be a long
Sure.
time.
Mhm.
Very importantly, but first of all, Dipendra, both you and Achinto hit on the money. But there's the philosophical debate that I can see. The reason that many of us, most of us, came to this country is because of its excellence in education, higher education in particular. I see a grave danger for the United States to excel and continue to innovate and keep its position as the leader in science and technology. I see that severely endangered, particularly with the demise of the education, with the demise of the grants and scientific approach. And I fully uh, ascribe that to the current administration. I was benefited because of a grant. Many of you are. So the reason we are in this part of this phase of the economy because of the progress in science and technology. If we say, okay, AI is going to take over everything, we just need a diploma from Coursera or anywhere. Where is the motivation for kids to go to the higher studies and develop and invent and innovate few things so you can continue to excel in the world, be number one? China is replacing us immensely. So are India, so is Australia, Canada, others. So don't think Germany, don't think the opportunities are already here. Thank you. Move on.
Thank you very much. Let's move on to the next question. And again, we will try to cover a little bit quicker than what we have been doing so far, again, so that we can cover more variety of questions. Next one is from, I guess, from a first-time home buyer who are kind of a little bit worried and whatnot. Their question is like this. We have stretched our dollars and bought our first home at the current interest rate, which is pretty high. How risky is my house purchase? How to ensure my emergency fund is not impacted? And what percent should I keep aside of my income as my emergency fund? I would let Shomenda handle this question.
Okay, thank you. I built my first home. Many of you did not come to this country, 1990 in New Mexico. And I remember the interest rate that I had to borrow money to buy that home. It was 6.5%, to be precise. And before that, during Reagan era, 1981 through almost 8 years then, the interest rate was almost 11%. Many of you could remember, although when you came here, interest was much higher. Since then, interest rate has precipitously dropped. Okay? And many of you probably refinanced your existing home or bought a home at 3.54. If you have a perfect credit, you could have gotten even 3.5%. So those days are gone. The interest rate right now for prime is hovering around 6.5 or 6 if you have a very top score. Plus, that's called the LIBOR rate plus. Okay? So I totally sympathize with you, the first timer, if you bought it at 7.5, 8% or even below. But I think the interest rate is going to come down. Jerome Powell is not backing down, but he has to. In my opinion, he will. Probably in June or after. He will, but don't expect the interest rate to go down very fast, that quick. It probably will be 0.25 basis point or quarter point, or maybe maximum 50 basis points or half a point. But that does not immediately help. The reason we buy, this is the biggest investment in our life, most of the Americans, is home. Okay? And we call it in economics wealth effect. So, for example, if our home increases in value, then we can take that part of the equity or do other things. That's called wealth effect. So, your home, as long as it's increasing in value, I think it will be okay. But as an emergency fund, you should always keep some emergency fund for 2-3 months of payment at least. That's all.
Thank you. Next question is also related to house, but more on the expenses for fixing different things at the house. Here's the question: to fix my house, which is a very expensive item, what kind of insurance should I buy at all? What are the topmost house repair expensive items, keeping in mind that the tariffs are going to affect different things that we are going to buy for fixing house? Ochinto, would you go with this, please?
I personally think you are more qualified to answer this question, having had an umpteen number of homes and that business.
That's okay. Go ahead.
I'm not sure if this question pertains to this conversation, but if we must answer, maybe you can take it up.
Other speakers?
I will just say this, that if you're talking about repair work and maintenance and things like that,
Yes.
this is coming out of your maintenance or your emergency fund. I know Sominda said 3 months. I believe it is 6 months worth of expenses. And so the question did not make sense to me when I heard that how much insurance should I buy to fix my house? That's not how insurance works. Insurance is for damages and destruction and to rebuild. So I think if you're thinking about having some money set aside for repair work, then if you already know what needs to be fixed, get an estimate and then see if you can take it out of your emergency fund without losing too much, or then you have to save some money from your salary every month to build towards it. Maybe create a separate account. Say the repair work costs $10,000 and you don't have that. So maybe you save more from your salary and put in $500 a month or so, or however you can, to build up that 10,000 and then go for it. Things like that. But it's not about buying insurance, if that was what is the question. It should come from your emergency fund.
Thank
I think
you.
one other, out of the
Go ahead.
just one loop around. I think one of the common themes between the two questions relates to a certain degree of uncomfortableness about the economic situation, and it relates to emergency fund. And just to put a pulse on that, two things, whether it is house repair or buying a new home or something like that, uh, this is my personal opinion that, as far as the fundamentals are concerned, the chances of recession are very high. And that is increasing because with 37 trillion dollars of debt, a tariff war going, federal government spending $2 trillion over its revenue. So no matter how you slice and dice it, something got to give. I think Shomenda also alluded to that Fed Governor Powell needs to take a stance and cut the interest rate. So the chances of recession is
Very high.
very high, very high. And when recession gets very high, of course, some of us, I hope it is none of us, but it is possible that some of us will get adversely affected because that's what recessions do. So it provides an opportunity for some because recession reduces the prices. If you have a lot of cash, you can pick up very good assets for cheap. If the housing market goes down, you can buy. But if the probability of recession goes up, I think the 3 month to 6 month, in my opinion, is not a good place to be. I personally think, and I'm not a financial advisor, I have no legitimacy to give a financial advice. But from an economic standpoint, a higher cushion in terms of savings, cash reserves, I mean, 6 to 9, I would push it. I mean, just to be sure, because we don't know how the economic situation may turn out, and aggressively trying to reduce the cost, I mean, the the loans, the liabilities as much as possible. That will be my approach.
Thank you. Ochinto, you brought up the issue or the topic of recession, and we do have a question directly linked to recession. Since you brought it up, I would ask or request you to take just another minute, not more than that, to tackle this question. I'll read it out, and you already answered part of it. And if you can answer the rest of it, then we'll move on to the next question. Is a recession coming? How soon? How can I prepare for that? I know you have answered part of it already, but the rest of it.
Uh, well, the answer to the first part is a recession coming? All I can say that conditions are very ripe for a recession. Now, is it coming? Can we avoid it? Can we have a soft landing? That's a much more complex question. But in my opinion, what are the chances of having a recession in the next 12 to 24 months? That's not very trivial. I mean, that's quite tangible. Um, Not only because of economic situation, because geopolitical situations, and different other things that are going on, including global trade and mineral policy and industrial policy and regulatory policy and all. So yes, the chances of recession are pretty high. How can you prepare? I mean, like humanity has been preparing forever, right? I mean, you have good cushion, you have some good savings, and try to work on the liability. Now, if you are in the market, I mean, Dipendra can probably speak 1,000 times better than me. Uh, if one of the ways you can fight recession is to buy some good put options, right? Some long-term put options. The market goes down and you make money hand over the fist. If you don't know what I'm talking about, watch the movie The Big Short, and you will kind of get an idea what it is. So I think that's rightly in Dipendra's wheelhouse. I mean, while you can hope for the best playing the long market from an option standpoint, but if you are, I mean, scared, put option always works fine. But you know, in general, keeping the cost low and having a good amount of savings and just aggressively getting down the liability, that can get you through any market, good, bad, horizontal, doesn't matter.
Thank you. Let's move on to the next question. We have gotten a couple of questions from our audience too. We sincerely appreciate that. Here's another question, and this is for Shominda. I am planning to retire soon. It appears that my 401k has been heavily and negatively impacted in the recent past. Should I consider working for another couple of extra years, or can I comfortably retire now? Your take.
Very good, Arup. I think that's probably my situation, to be precise. The day I announced retirement, which was March, I sent it to my acting department chair and to the dean that I'm retiring end of the semester. And it's so ironic. The very next day, the market went down 1,000 points. And then 2,000 points. So I looked at my portfolio. I said, oh my God, 11% down in 2 days. So what I did, I immediately changed my the balance, the portfolio balance, what you call, to more fixed income. Okay, fixed income means bond and treasury and things like that. Okay, so I immediately rebalanced my portfolio, and since then it has not gone down that much. In fact, lately it went up slightly because the market is readjusting. All right. Having said that, so if you have to have a long-term plan. If you are young in your 50s or 40s or 30s, you have a long time to go. And the stock market, guys, is for the long haul. It's not for a quick buck. You could be very lucky if you put options, call option. I've tried all of those and made some money, lost a lot of money. So I'm not a seasoned trader like Dipendra, but I might start that from tomorrow. Having said that, so if you are in the market, what Achinto said, I fully agree, go for the long haul. Okay. And eventually, that's the history of our country here, that over 100 years, Dow Jones Index has, I was just looking at it, I have the data, went 17,000% since the last 100 years. Okay. So that means that if you are for the long haul, of course, Keynes said you in the long run, we are all dead. But yes, you'll be dead. But question is when. So if you have 20, 30, 40 years left in your academic, in your career, working life, then go for the long haul. Don't get panicked immediately. But if your horizon is 2 years, 3 years, 5 years, even 10 years, you start looking at more adjustment in your portfolio. I'm not a financial advisor. I cannot give you financial advice, but this is what I did. But it was too late, I guess. That's all.
Okay, thank you.
Can I add,
We have
Arupda?
about 10 minutes, so we would need to kind of go a little bit faster than before. So let's do that. Here's a question from the audience. This question is from Priyanka Sharma, and I would like Dipendra, if you can address this. Are tariffs expected to help reduce U.S. national debt? Basically, are they at all needed?
Well, that is the stated intent, right? And is it actually going to do? We do not know because in this case, there is a huge spending bill coming up, adding 4 trillion over some time. So is it going to reduce it? Because so that is the tax cuts and other things that is going to come up. So will tariffs actually put a dent into the national debt? I don't know. Depend. So there's a lot of factors at play. Chances are that it is more show than reality. And as you know, the Trump's approach is bombastic demands initially and then scale down, like we saw China, like we seeing with other countries and so on and so forth. So there's tariffs money coming in for sure, but don't forget that this administration has not yet started spending. As of now, it is all cut, Doge cuts, tariff revenue, income, and so on. When the tax cut spending bill comes and they are going through the Congress at this point, then you will see what happens. So it's too early to say.
Okay, thank you very much. Next question is also from another person in our audience today, Samir Saxena. This question I will present to Achinto, if you would please. What options do we have for college fund for a kid in 7th grade? I guess must be a personal situation, and how to approach it. How much we should have as a ballpark figure. Achinto, you're the money man.
I think that is a very, very, very personal question. Uh, Again, there is no right answer. If you are planning, if it is 7th grade, we are looking at college in like what, 5 years. Um, if you are going to pay out of your pocket completely at Harvard and you do not qualify for any financial aid, you should plan for $500,000. If you are happy with, a very good state school education, or even a chancellor scholarship or Vanderbilt. I mean, I'm not saying that there are scholarships. I'm saying two extremes. A good state school education, fantastic education, could probably set you back by zero because you are on full scholarship. So, what will be a right amount to save? That depends on what is the target school, how you are preparing for the college, what kind of major you are planning on like pursuing. Um, so this this comes down to a lot of personal choices. How many credit hours you will have to do, how long you are going to be in college. Are you going to go there for 3 years and do summers and graduate, or stay the whole 4 years? So there are lots of things, but I think the maximum that we are going to see without any grants, any kind of scholarship, the full sticker price in a top 20 institution will be in the ballpark of 4 to 500K.
Okay.
It could be as
Th-
little as zero with full scholarship. So take your pick.
Thank you very much. Here's a question, and we're getting closer to our closing time, I guess. Shomada, here's a question for you. The background is the new administration has taken several steps which were never taken by other administrations, irrespective of the party, uh, in the field of economy. Now, having said that, with their already a few months of work, do you think the US economy currently is stronger now or weaker? And how do you see that happening at the end of this administration's term?
Whosoever has asked this question is very
Without being too political.
no, I don't mean to be political agenda. I don't have any, but very objective. But this is a very loaded question. Okay, thank you for this hugely loaded question. The way I see it,
But a minute and a half, that's all.
Trump is famous for his shock and awe policy. So he shocked the world, awed the world, and then he's getting back. I think Dipendra already mentioned that. So we see a trend. Today he went to MBS. MBS announced $600 billion of investment in the United States, $142 billion of defense contract. He's going to now Qatar, got a $400 million plane, all of those. Then India and then China. We don't know the China story yet. It's unraveling. Mexico, Canada, etc. So yes, this is absolutely uncharted territory. None of these US president, nobody so far in our history has done this, like this kind of shock and awe. So that has a cutting edge. I think that's a double-edged sword. Number one, yes, you don't know what the certainty is. Business don't like uncertainties, guys. Okay? If you're planning ahead, you don't know what to plan. You plan 60%, 70%, 10%, 20%, 30%, what? How are you going to plan in ahead of time your inventory, your supply chain, and all that? So I see there is a mismatch. So if he stated, I'm going to have a blanket 25% tariff, I could live with that. Then businesses can definitely adjust to that. But we don't know. This is a totally uncharted territory. Okay? So that causes a rift among the world premier economies. Yesterday or day before, 30 countries met in France. They all took a motion that they are going to support Ukraine. Yet we have no sanctions, nothing against Russia. So I see the uncertainties are looming at large. And with that uncertainty, everything is unpredictable. So it's going to be in a chaos. I hope his advisors, he himself, is understanding, and the chaotic conditions could be curtailed so that we can leave a reasonably smooth path of progress, which we did. Thank you.
Okay, thank you. Next question is for Deependra. This is very much his area of expertise for sure. How is the option trading in terms of volatility? Can you give us some tips on any option trading?
If I did, that would be financial advice. So I need to refrain from it because I'm not a registered investment advisor. But I'll say a few things that might help. I think the question is coming from people who want to either have a side income, kind of an yield, or they want to protect their portfolio. So I'll just mention two things. If you are trying to have a side income, so to speak, we call it yield harvesting, then learn about spreads and short spreads, meaning you sell spreads of calls or puts. If you think that you're bullish and everything will go up, then you sell puts below the market and you hope or expect that the price will not come to your strike prices, and therefore you will keep the premium that you collected. On the other hand, if you are bearish, that you sell call spreads above the market, and you expect that the market will not go over that, it will stay below your strike prices, and you will keep the premium. This is the side income thing. So learn about spreads, call spreads, put spreads, when it is applicable. Those are the basic places to start. If you already have a sizable portfolio, when I say sizable portfolio, meaning at least 100 shares of something, that kind of entitles you to do what is called a covered call. Again, look it up, and YouTube is full of any of these. A covered call option can be used to, again, harvest yield out of your existing portfolio. If you have 100 shares of something, then you can sell call options against it to collect a little bit of premium in a certain way, such that you keep your shares. It is not called away, meaning you don't have to actually give it away or sell it, but you collect the premium. So that's a covered call option. And finally, if you are protecting your portfolio, then what Ashintuda was talking about way earlier is that you buy put options, and then I would say buy put spreads, so that you don't pay the full cost of a put. And the put option is basically you will earn, because it's a debit option, meaning you have bought the put option, you will earn if markets go down, and the income that you earn will kind of nullify, offset, or at least partially offset the loss you would have in your portfolio. But if you think also about buying put spreads, so that it is a two-legged option tool, such that you don't pay the full price to buy the put option to protect your portfolio. So in summary, three things. If you're trying to generate an income, think about call spreads above market, put spreads below market, sell them. How to sell, when to sell, big things to learn. And if you are trying to protect your portfolio, then I would say buy put spreads, so that should it come to, it's like insurance. Should it come to a devastating downward spiral, then you can protect some of your losses. That's it.
Thank you. We still have 2-3 questions. If our host Shubhajit Biswas allows us, we can continue with 2-3 questions. But if he decides not, that's up to him.
So
Why not? We started 10 minutes late, so just continue.
I think we should take the, if we have 3 questions left, Arudha, let's complete the 3 questions and we
Okay.
can close.
Very good. Very good. Thank you so much. This question is for Ochinto. Actually, part of the answers we already received from Ochinto and Shominda before, but still, if you can add anything, Ochinto, that would be super awesome. The question is like, I invest in stocks. My portfolio has been negatively impacted lately. Is that a reason of concern for me or not at all to worry? Anything you may want to add to what you said before?
I can only say you are not alone. I mean, I see Dipendra's hand also. Yes, I mean, recent market turmoils have definitely left many people a little bit uncomfortable. The stocks have gone down. Uh, Again, Dipendra, I think, just gave us a master class about options. As an investor, if you are going long on stocks, like you have stock invested, being able to sell covered calls or protect your investment by put spread is a good investment tool to have. Um, and then you can probably find 1,000 videos on YouTube. Should you be concerned? It depends on how short your horizon is. And again, I'm giving all these answers. Please know I'm not a financial advisor. So this is completely for educational purposes, disclaimer. If you are trying to, as Warren Buffett will say, when everybody becomes scared, you become greedy. And if everybody is greedy, you become scared. But um, markets will go up, markets will go down. That's what markets do. But as Somenda has said, if you take a long-term history, next 5 years, 10 years, 15 years, 20 years, one thing I'm absolutely sure about. I will bet on the US economy. This is the best economy in the world. We have historically proved it. Do we have challenges? Yes. Sometimes we don't agree with everything. The politics doesn't go in our liking. Some of us may love the current administration. Some of us absolutely hate the current. But we live in a democracy. So things are going to change. But if you are there for a long haul, I mean, I will not be concerned. But I will also say that being a stock investor is probably not 100% of the story. Knowing what to buy and when to buy is very important. So when you are investing, think about, stocks are like your your relatives, your friends, your children, your neighbor. I mean, you don't want the thieves to come to your room and have a feast. Similarly, you don't buy a bad company. And the same thing happens for stocks. I mean, but if you are good at finding the good stocks, I mean, that's a good option. If you are uncertain, some broad market index always helps, SPY, QQQ, things like that. But over the long term, I'm 100% bullish on United States economy. And I am not going to bet against United States. I mean, no matter what. So no, I will not be very concerned if I have a stomach to ride it for the long term and if I have the right stocks.
Thank you very much. Here's a
Arubda,
question
Arubda,
for
excuse me,
Shlomen. Okay, Deependra, you want to add something? Go ahead, please.
very quickly. The real risk, in my opinion, is not whether the US economy will boom, it will, but whether the word that has been thrown around is stagflation for a while now, but whether that will actually materialize. This is a situation in which you will have persistent inflation without economic growth. And those conditions happen. If that happens, then your portfolio is not going to go much. We have had that before, 1968 to 82. We had that situation in the United States. That period also came after a kind of populist period, if you will. The parallels that are drawn is Nixon coming in, Trump coming in, all of those things are there, being talked about a lot these days. That is real, as in that there is a non-zero chance, I'll say at this point, actually, I'd say more than 25% chance that we are going to enter a period in which, because of how this administration has come, which is driven by populism, who at the core of it has been at the receiving end, wrong end, if you will, of monetary benefits. And that is most of the wealth over the last 40 years have gone to some few people in the US, and the inequality has increased and so on. So that inequality fueled Trump to quite a bit of extent. Having said that, whenever the populist governments are there, they need to spend money. And spending money are by definition inflationary government spending, which is why the stock market rose how it rose right after Trump's election, because the market was expecting spending. But Trump started with tariffs, which are demand destructive. What that means is that the economic growth is being pushed against this spending that is coming, honestly, from the government. So over the next few years, we are going to see a push and pull between, let us see how the tariffs play out, what role they play, and so on and so forth. But if it happens that these things are pulling from each other, pushing at each other, we can see a period, and the last time it lasted about 18 years, but we can see a period of a lot of political turmoil, a lot of dampened economic growth, and at the same time, persistent inflation. And that is stagflation, and that there is a real risk for that. And I understand that, Ashwin is bullish on USA. Everyone should be in general because of the structure. But if there, then you cannot just look at the stock market and passively expect your portfolio to go up. At that point, you will need active investment, a little more active learning of how to be dynamic in the stock market and so on. If that is your way, there are a lot of other ways to make money. Stock market is just one of them. So I just want to point out that that scenario is also probable. That's all.
Thank you. We have two more questions. If we can quickly cover those, that would be super awesome. Shomenda, question for you. Is the current US economy at all sustainable, especially for the middle class family like ours? How do we prepare ourselves to weather the storm?
Good question. I think we have tried to address most of it. And Dipendra very eloquently mentioned about stagflation. Stagflation, what is stagflation? Stagnation in the growth area or very low growth and inflation. Stagflation. There is a probability there, but I don't see, I kind of agree with Achinto. I think he didn't say that quite, but I see a soft landing. I don't see because the economy is still robust, more or less. Okay, the last month, 170,000 jobs were created. So I was not expecting 170,000 jobs. I was expecting much lower, but it did. And what Trump is doing, shock and awe, and as a result, he's bringing in some stuff. Think about that. If the $600 billion investment from Saudi and maybe $1 trillion plus for the rest of the Arab world comes in, so there will be economic impact of those, right? So I guarantee you, Dipendra, those companies that have left a long time ago through Mexico, Maquiladora, and then to China, very few will come back. But there'll be new companies coming in. So I don't see the stagnation of the economy that much in my radar. There will be a soft landing. There will be a recession for a short period of time. Then the monetary policy gap, we talk about the lags in the monetary policy versus fiscal policy. Monetary policy lags are much shorter. So immediately, the monetary sector, the money supply, and that part will be immediately taken care of. Whether it's Jerome Powell does or replacing Jerome Powell, somebody else will do that. And that would rebalance the housing sector. And as you know, the housing is the engine of growth because one house has so many different things. We call it economic multiplier, impact multiplier. So I don't see that much in terms of the economy downturn, but I do see in the next 6 to 9 months, maybe even shorter gestation, that there will be a recession. So how do you prepare ourselves, middle class? Do your things, keep your jobs, try to innovate as much as you can, learn AI, stay at the cutting edge, and try to offset your income loss if you have through what Dipendra has very eloquently said, put spreads. I have to go Dipendra to your house and sit down with you because I'm going to do full-time trading for three hours a day. So that's so very well said. I don't think there is a panic needed. For most of your young folks, don't need to panic. Do things, but I would say that be observant, be on top of your investment.
Achinto, you wanted to add something?
Yeah, just a little contextual thing. Somenda has covered pretty much everything. But one thing from a middle class standpoint, I mean, I don't want to reflect on next 6 months to 9 months or 12 months, but we have to be also mindful about the growing pressure of the size of government in the economy.
Absolutely.
And that is a fact that middle class like us, some of us are not probably as middle, but I mean, we are pretty much the taxpayers. Just to give you a contrast, we have about 340 million people, but about 113 or 14 million people pay taxes. So 2 out of 3 in the US economy don't pay taxes. Of course, some of them are children, some of them are elderly, which is understandable. So we have a very large welfare sector of the economy, and that's not going to go down anytime soon. I mean, federal government is spending $7 trillion. Add to that the state governments, what they are spending, the local governments, what they are spending. So you have to be also mindful about other ways that either our taxes are going to go up at some point in time or inflation, or, I mean, a struggle. Don't ignore the other taxes. For example, property taxes. I live in Davidson County. And this is the third time in 5 years the government increasing taxes. 37% in 2020, 25, 27% in 2022, and now probably 40 to 45%. So there are all those headwinds, very high welfare dependence, Medicare, Medicaid, Social Security, food stamp, housing vouchers, and all that. There is a declining tax base at the local level. So I don't think that if we have a good job and if we are getting money, we should not be very worried. But there will be pressure. And if you do some Google, you will see that that is a very, very silent threat that the middle class and even upper middle classes are facing. There are articles that seem to suggest even people making, quarter of a million or above $300,000 are basically thinking they are living paycheck to paycheck, depending on which area they are, of the country they are in. So I will not underestimate those pressures coming from governments, whether they are right or left of the spectrum.
Thank you. We have, I guess, this is the last question that I have, unless there are further questions from the audience. This last question, I guess, is typical for Dipendra. With the current trend, should I invest in tech stocks or non-tech stocks, or not invest in stocks at all?
Okay. So I personally do not like single name stocks. I don't invest myself in it. And I know Indranidhi asked in the chat or in gold. So let me answer it this way. Technology over the last 30 years or so has blossomed into what it has, largely based on the initial push, if you will, from government, starting from the internet, which was a government enterprise to start with, and everything else. The government has helped with subsidies and everything and so on to basically sending the money to Silicon Valley is what we said. They got a lot of tax benefits and so on and so forth. And that's why there was this rapid expansion in terms of new products coming out and so on and so forth, which were then sold to us in terms of services or in terms of products. Is that continuing to go that same way? Look around yourself. We are every day more and more surrounded by tech. And particularly with the AI coming in the form of large language models, the LLMs that we all use, ChatGPT and all, it is going to increase. Very soon, there is going to be all kinds of automated stuff, driverless cars, humanoid robots, flying vehicles probably, and whatever it is. And so the technology march will continue, but which ones? And so at this point, my belief, and it is not financial advice at all, is that anything that aligns with AI probably is good. There is another area, and that is quantum computing. Now, I do not own any such stocks. I do not. It is right now at the very penny stock stage. Everybody's saying that they're quantum computing and so on and so forth. But quantum computing stocks will be a rage at some point, in my opinion, purely because of what services and products it can bring. The question was, should I invest in stocks? Should I invest in stocks at all? Should I invest in tech stocks or non-tech stocks? I have a very distinct philosophy on this. And again, what you invest on will be dependent on your risk tolerance, your time horizon, and finally, your ability to leave your portfolio untouched for some time and let it grow. And so I will just say, to end this, I'll just say this, that my personal approach to investing, if you will, is that my retirement account should be market linked. Because today the indexes, the S&P, 500 or NASDAQ or whatever, are designed in such a way to continuously replace and fill it up with the best performers. And so the market indexes by themselves, for the most non-trading person, non-market person are some of the best investments. I keep my retirement portfolio in that too. So that is one. Secondly, yes to tech, but choose carefully by learning the trends. Which tech, not all tech. And should you not invest at all? I think that is a bad idea. I think you're leaving too much money on the table if you don't invest at all. You need to learn, you need to start small. You will go through the learning pangs, if you will, or pains of losing some money. But I think, yes, everybody should learn to invest for sure. Otherwise, you're leaving a lot of money on the table and you're not letting your money work for you.
Thank you very much. Appreciate it. Any further question from anyone in the audience? If not, then we will proceed to close the meeting. I would like to take a quick moment to thank our three speakers, Shomenda, Ochinto, and Dipendro. They did a super amazing job and definitely provided so much of insights to so many different questions with this all this is going on in the current US economy, and we sincerely appreciate all your uh, all your advices and everything. I understand, we all understand that none of you are financial advisors, but your advices will definitely go a long way for each one of us, and we sincerely appreciate that. I would like to also thank and appreciate BAGN for taking this topic up when Oviru proposed it and putting this together for all of us. I personally got to learn so many things today that I did not know. So thanks to BAGN as well, especially Onindo and uh, Shubhajit Biswas for putting this together. They took a lot of time, effort in doing so. I understand that they are perhaps going to do similar seminars in the near future on other different topics too. Thanks to not only the BAGN community, but overall our Indian community at large who joined tonight to listen to our three speakers, and hopefully it was worth it for all of them. So really appreciate that. At the closing, would Anindo and or Shubhajit want to add anything?
Yes,
Please go ahead.
yes, thank you, Arud. I actually echo your comments as well. So thank you, our panelists, Shomenda, Dipendro, and Ochinto, for your informative discussions and everything that you said. Really appreciate your time today, and a big thanks goes to you, Arudha, for keeping everything together and talking with everyone and getting the questions through to the speakers. Thanks to Subhajit as well for hosting this. And again, this actually was a suggestion from the members, and you're right that we are going to do more of these sessions in the future. So if you have any topics for that you would like to see as discussed here in this forum, please send an email to secretary at bagnonline.com, and we'll definitely plan to include that in an upcoming session. So thank you everyone again. Thank you audience for your time and participation. Really, really appreciate it. Thank you again. Thank you all.
Thank you.
Thank you
Thank you.
so much. Bye bye,
Good night.
everybody.
Thank you, everyone.
Thank
Good
you.
night.
Bye bye.